Welcome to The Explainer. So, you've seen the headlines, right? All this money pouring into artificial intelligence. The question is, are we building the future or are we just pumping up a giant trillion-dollar bubble? That's what we're digging into today.
Okay, so to really get a handle on this, let's just start with one number, a really, really big number that kind of sets the stage for this whole conversation.
Yeah, that's right. By 2030, we're looking at estimates of nearly $7 trillion being spent on AI, data centers, and all the stuff that goes with them. I mean, that's just a mind-boggling figure, and it's really the core of the whole debate.
So that brings us right back to the big question everyone's asking. Is all this spending the foundation for a whole new economy, or are we just looking at the biggest speculative bubble in modern history, just waiting to pop?
All right, so let's tackle this head on. First, we're going to look at the arguments for why this might just be a massive AI bubble.
Okay, so the heart of the bubble argument is pretty simple, actually. It's a huge gap between the money going in and the money coming out. Think about it. Next year alone, companies are on track to spend something like $400 billion on data centers. But the revenue from AI, it's only projected to be around $50 billion. That's a massive disconnect, and it's making a lot of people nervous about when or if this will ever be profitable.
And this chart, wow, it really puts it into perspective. Look at that. The investment to revenue ratio for AI is sitting at about 8-to-1. That is literally double the ratio we saw during the telecom bubble and a whopping 4 times the railway bubble from back in the day. For these investments to make any sense, AI revenue has to grow at a pace we've just never seen before. But it's not just about the raw numbers. The way the money is actually moving around the AI ecosystem, well, that's raising some eyebrows too.
Yeah, there's this key idea called circular revenue. It sounds kind of technical, but think of it like this. It's a loop where a few giant companies are basically just passing the same money back and forth to each other. It makes their sales numbers look great, but it's not clear if any new money from real customers is actually coming into the system.
So here's how it works. You've got a chip maker, right? They invest a bunch of money into an AI startup. What does the startup do? It turns around and uses that exact same money to buy computing power from a big cloud provider. And then the cloud provider uses that money to buy, you guessed it, more chips from the original chip maker. See the circle? It looks like everyone is making a ton of revenue, but it's all happening in this closed loop before they've even proven that you or I or any other real customer will actually pay for the final product.
Okay, but what if this isn't a bubble at all? Let's flip the script and look at the other side of the coin. What's the case for this being the real deal, the foundation for some serious, durable growth? And this is what makes this whole thing so fascinating. For every single argument that this is a bubble, there's a really strong counterargument. You take things like massive upfront spending or physical bottlenecks. One person sees a speculative frenzy, and another sees the necessary hard work of building a technological revolution. It's really two sides of the same coin. So a huge argument against this being a bubble is what's left behind when the dust settles. We're talking about real, physical stuff, things you can touch, massive data centers, miles and miles of fiber optic cables, huge upgrades to the power grid. Unlike, say, a worthless stock certificate, these things don't just disappear if the market gets shaky. And people love to compare this to the railway boom back in the 19th century. Think about it. A ton of those railway companies went completely bust. But the tracks they laid, they were still there. And they created incredible, lasting economic value that basically powered the country for decades. The bet here is that these data centers are today's version of those railway tracks. Right, and this is where it gets really important for everyone, not just people in Silicon Valley. This whole AI boom isn't happening in a vacuum. It's having a direct and pretty profound impact on the entire real economy. And this is what's so wild, the ripple effect of all this AI spending. It's not just tech. It's actually driving a huge chunk of all U.S. economic growth right now. It's creating this massive new demand for electricity. It's boosting global trade in things like computer chips. And this is key. It's creating a ton of high-paying jobs for people like electricians and construction workers, the very people needed to build all this new infrastructure. But here's the flip side. That reliance, it creates a pretty big risk. Because so much of the stock market and even the GDP growth is now hitched to the AI wagon, any kind of downturn could have a much wider impact than past bubbles. If this investment party suddenly slows down, it could potentially drag the whole economy down with it. Okay, so look, nobody can predict the future, right? So instead of trying to give you a crystal ball, we're going to give you something better, a dashboard. A few key signals you can watch for yourself. These point to the fundamental knowledge gaps that, honestly, no one has the answer to yet.
All right, knowledge gap number 1. Will people actually pay for this stuff? I mean, really pay. We know companies are spending trillions, but are businesses and regular consumers like you and me going to pay enough for AI tools and services to justify that massive investment? The honest answer is, we just don't know yet. And the second big question mark is all about the physical world. It's a bottleneck problem. Can we literally build the power grid and the supply chains fast enough to keep up with all this digital ambition? We're already seeing super long wait times for critical things like power transformers. That could slow this whole train down, no matter how much demand there is.
So, here are the practical things you can actually track. For demand, keep an eye on cloud revenues. Are the AI-specific services growing way faster than the regular stuff? For supply, watch those lead times for transformers we just talked about. And for the big picture, the macroeconomy, look for productivity gains in industries outside of tech. That's the real test. If your local construction company or hospital starts getting way more efficient because of AI, then you know it's the real deal.
And that leaves us right here with a big final question. When all the hype dies down and the dust settles, what's going to be left? Are we going to have a bunch of digital ghost towns, these massively expensive, underused data centers? Or will we look back and see the bedrock of a whole new economy? Well, only time will tell. Thanks for joining us for this explainer.